Okay, so coming to the 2012 paper now. The first question, or question number 18, says GDP, they're asking for the definition. What is the sum of all exchanges of goods and services during a given year? Includes financial transactions such as the purchase of stocks or bonds, includes the purchase of intermediate stages in production, is the sum of total spending on all final user goods and services produced domestically during a given year, includes all goods and services produced during a given year. Which one is the most correct one? 1, 2, 3, 4, 5. Others? It's an easy one, not that hard. What do you all think? Okay. So it's not 1, right? It's not 2, it's not 3. So it's not 1, 2, and 3. So if that is the case, which one is the answer? It's 1. So there is 4 and 5 both left. What can we go with? So some of y'all gave me answer number 5 in the chat box. Okay. So answer number 5 says includes all goods and services during a given year. Now, when you say all goods and services, there is a problem, right? Why? Because there can be intermediate goods, no? Now, for example, if you include intermediate goods also, remember we talk about this double counting error in unit number 5. So if you include all goods, now farmer will say, okay, I produce this much of flour. The other guy will say, okay, from the flour, I produce this much of, let's say, bread, right? Then what happens? It becomes double counting. So it's not the value of all goods. It's the value of all final goods and services. So go through that area if you can't remember much. So which one is our answer? Answer number 4. Is that fine? Yeah. Moving to the next. Okay. Now see, there is another question again, right? On the business cycle. Remember, I told you there's a very common question almost every year, not usually every 2 years. Let's say this year, if they ask, next year it might not be there. Here in 11 and 12, both it was there. So, which of the following will most likely occur during the expansionary phase of the business cycle? So, expansionary phase of the business cycle is where what's happening? Where the actual output is increasing, right? This is what you call the this one, right? This one is what you call the expansionary phase. So what can we say during this? Real GDP rises. Is that correct? Can you say real GDP rises during the expansionary phase? I think yes, you can say that is right. Unemployment falls. Now, what happens during the expansionary phase, guys? The aggregate demand increases. As a result, firms produce more and more. So output increases. Producing more and more means they are hiring more and more people. Unemployment falls. And also aggregate demand is high, means inflation is also high. So I'll just, yes, real GDP is, remember guys, this axis here is real GDP, right? In this axis here is real GDP. So your output is a real GDP. It's increasing. Okay. I'll just write down the characteristics over here. So can you tell me, guys, during the expansionary phase, what and what happens? The aggregate demand increases. That's one. Given that the aggregate demand increases, what happens? The output, or we can call this the real GDP. Real GDP increases. Also, you can say that unemployment falls. Okay. And you can also say inflation rises. Or you can say price levels start to rise. That is what happens during the expansionary phase, or during a boom, we can say. So which one is the correct answer, guys? Answer 1 looks correct. We look at the other answers also. GDP rises, unemployment rises. Wrong. Unemployment don't rise, unemployment falls. GDP decline. Wrong. Interest rate rise, number of business failures rise. Now this number of business failures rise is wrong. Now, during a expansion, businesses are doing well. That's why the actual output is going up. And this interest rate rising is no, guys. During an expansion, the interest rates are actually low. That's why firms are borrowing and investing, and actual output is going up. And then when it reaches the peak, the government will come and implement a contractionary policy. Then it will start to come down. Okay. So no. Inflation rises, correct. Employment falls, no. Unemployment falls. You can't say employment falls. How does inflation rise? Because aggregate demand rises. Remember, unit number 7 we studied demand pull inflation. When the aggregate demand increases, price levels in the economy starts to go up. That's unit number 7. Okay. So answer number 1. Any other questions from this? Fine. Okay. We'll move to the next. Question 20. In calculating GDP, all of the following are excluded except. That means 4 of this is not included, 1 of this is included. Which one? The value of intermediate goods, the value of all homes built in the year in question, the value of used goods, purely financial transactions, subsidies from the government. Or 4 of them are excluded except which one? What is the one that is included in GDP? The one that is included in GDP, guys, is the second one, right? All homes built, right? Now remember, if you're buying a second-hand house, you can't include that. But if you're building a house newly, right? If the house is built newly during that year, that you can include. Please, there is an interesting thing here, guys, right? The interesting thing is, think now when we I'll explain the other options also, don't worry. Okay. Yes. Now, who builds houses? Is it the firms? Is it the households, people like you and me, or is it the government? Who usually builds homes? Houses are built by households, right? Not the firms, no, guys. I'm not saying the builder. I'm saying who is responsible. We know. We are the ones who are making houses, no? So now, when households spend on goods and services, where do we include it? Under private consumption, government consumption, or investment? Where do we include it? When households spend, where do we include it? We include this under private consumption, right? When households spend on anything, we include private consumption. But you know this one, this household spending on building new houses, this is an exemption. Even though it's the households who are spending now, usually when households spend, we put it under private consumption. But the amount of money spent on building houses is not included under private consumption. Instead, it goes under gross investment. So remember gross capital formation. So inside this also you have gross domestic fixed capital formation. This is where you include this, right? That's a point to note. Even though this is spent by households, you don't include it in private consumption. It's included in investment. The main reason is because this is like a long-term thing. You don't build a house for 1 or 2 years, right? You build a house and you might be living for around 20, 30 years. So that's why you consider that as a under fixed capital formation. Is that clear? Questions, problems, issues? Okay. Then the other options. So if you look at the other options, now subsidies from the government. One person asked, why don't we include this? Yes, just think, when we are calculating GDP, right? Remember, in output and the income approach, after going to GVA, how do we go to GDP? How do we go to GDP? We add taxes, okay, and we remove subsidies, right? So how can you say that subsidies are included in GDP? You're removing subsidies, you're minusing it. Now, this is like, for example, if someone asks you, do we include imports in our GDP? Now, some person will think, imports is there, no, sir, in the calculation. I remember, C plus I plus G, X minus M, that is how you calculate GDP. Imports are there, no? So we include. No, you're deducting imports. So deducting imports means you're not including it, you're removing it. Same thing with subsidies here. So you're not including subsidies in this. Subsidies are removed from the GDP. If subsidies are greater than, if subsidy is greater than taxes, then we add net taxes. No. So then net taxes would be a minus figure, right? Now, for example, let's say gross value added at basic price is 100. Let's say taxes in that economy is 50. Okay. Let's say subsidies in that economy is, let's say 150. Okay. So then how much is our net tax figure? Our net tax figure will be a minus 100. Okay. So our final answer will be a 900, correct? But that is, I am not saying that you add net taxes. Sorry, I'm not saying you minus net. Net taxes are added, but it can be a negative figure, no problem. But that doesn't change the logic of including subsidies. Is that okay? Market price to basic price, adding subsidy. Yeah, if you go from market to basic, the other side, then you add subsidies, fine. Okay, that's fine. Then what is the fourth one, guys? The fourth one, some of you will ask me, why isn't this included? Now, what are purely financial transactions? Purely financial transactions are like, you are purchasing some shares, right? You purchase shares, or maybe you purchase some treasury bills or bonds, right? So now those, there is no productive economic activity happening now. Now, when you buy a share, what happens? Money is going from your bank account to a business's bank account. That's what's happening, right? So there is no pure this thing. Please give me 1 second. Hold on, I'm getting a call. I cut it once. Give me 1 second. Okay, sorry. Right. So purchasing of shares, purchasing of bonds, all of this is purely financial transaction. So what happens here? Money goes from your bank account to the business's bank account. So there is no productive economic activity. Remember, to include something in GDP, what's fundamental? Production is fundamental. There should be some sort of a value addition. There is no value addition here. Money is just going from here to here. So can you include that in GDP? You can't. That's like a transfer, guys. It's a purely financial transaction. That's what you call those. We don't include those in GDP. Then used goods, we don't include that second-hand transactions, and also intermediate goods also we don't include. Then it becomes double counting. Is that fine, guys? 20 is answer number 2. Questions, problems, issues? Okay. Okay. We'll then move to the next one. That's the question number 21. Long-term capital comes under gross domestic capital formation. Yes. Hold on. Okay. Okay. But they say selected macroeconomic data from economy is given below. Government purchase, wages, depreciation, gross investment, private consumption, net exports, net indirect taxes. Net domestic product at market price. Yes, when they give you a question like this, what's the first thing that you need to do? What's the first thing that you need to do when they give you a question? Calculation type of a question like this. What's the first thing that you do? Skip the question and go to the next? No, you need to find which approach you need to use, because they give you so much of additional information in questions like this. So can you tell me, guys, which approach should we use? There is the income approach, output approach, and the expenditure approach. Which approach? Here you can ideally use the expenditure approach, right? Looking at the data given, you can use the expenditure approach. So in the expenditure approach, how do you find the GDP? What and what do you add and what do you minus? You have private consumption, you add investment or gross domestic capital formation, we call it. You add government purchases, and then you get GDE. To this, you add net exports, then you get GDP. So now, why did I tell you to find the approach first? Because if you don't find the approach, what you will do is you will go and do some nonsense. Things like what? You will go and, for example, right now there is this. There is, for example, wages and salaries here. So some of you all will go and add wages and salaries. You all remember? I remember we took wages in the calculation, but that was the income approach. That's what you call compensation of employees now. So you don't add that in the expenditure approach. Then some of you all remember, I remember when going to GDP at market price, we have to add net indirect taxes. But remember, in the expenditure approach, we don't adjust for taxes because taxes are already there inside this private consumption and investment. So you don't include this as well. Yeah. And then can you all tell me, guys? Now they have given us gross investment. Is depreciation already inside this or not? Yes or no? Is depreciation already included inside gross investment? It is included. Remember, if someone tells you gross means depreciation is already included. When you minus depreciation only, you get net investment. So if they say gross capital formation, that is including depreciation. If they say net capital formation, that is minus depreciation. Now, if someone goes and adds both of this again, then you get the wrong answer. So remember, if it's a gross investment or something of gross means, GDP is already included. Don't go and add it again. So then how do we figure out the answer for this? How much is our private consumption? Private consumption, 2,200. Gross investment, 400. Don't go and add depreciation again because it's there in that. Then government purchases, 500. Because when we add these three, what do we get? Not the answer, I mean, what is it called? Private consumption plus investment plus government purchase. This is called GDP. This is not GDP. This is gross domestic expenditure. How much is that? 22 plus 500 plus 3,100. To this, if you add net exports, how much is that? That's a minus 50. Yes, just because net exports is a negative figure, you don't change the equation, right? Don't say minus net exports. Equation, the proper logic is you have to add net exports. But that adding figure is a negative. That's okay. But some of you all I have seen, especially in paper 2, when you all do this, you all say if net exports are minus, you say minus net exports. That's wrong. You need to say you add it. Then how much is our GDP, guys? GDP is 3,100 minus a 50. That's a 3,050. Is that our answer? Yes, we've calculated GDP at 3,050. Okay, that's not our answer because the question is asking for what? Question is asking for NDP, net domestic product. So how do I go from gross domestic product to net domestic product? How do I go to this? How do I go from GDP to this thing? Now I will minus depreciation. Or in other words, we call this consumption of fixed capital. How much is that? That's a 400. So what's the number then? How much do we get? 2,650. That has to be your answer for this question. So once again to repeat, guys, one person wanted. So remember, if in the question, if they say gross, let's say gross investment, gross capital formation, that means GDP is already, sorry, not GDP, depreciation is already included in that. So don't go and add depreciation again. Yeah. So here when they say gross investment, that means inside this 400. Now remember, now what is gross investment? Gross investment will have gross domestic fixed capital formation. It will have depreciation. It will have changes in value. Now you will wonder, so then how both of these are 400? So maybe changes in value is negative, or maybe changes in inventory is negative. That can happen. Changes in inventory is the opening minus the closing stock. Maybe that can be negative. So don't worry too much about, so then how come this, if this 400 and 400 are the same, does that mean that these numbers are zero? Maybe it can be zero also, right? So don't try to overthink it, because if you overthink, you need to properly overthink it. But some of you all don't overthink properly. That's what happens. If we didn't add gross investment, we don't need to deduct. Don't do that nonsense, right? Because if gross investment is a different number, please go with the logic. Just because these two numbers are the same, please don't go and change the equation. Yeah, got it? Just because the numbers are the same, don't go and simply avoid adding investment here and don't do any crazy things there. Is that okay? This is a basic normal expenditure approach calculation. How to find the approach? So you need to have learned the units. So if you if you have learned the theory, guys, if you know the three approaches, then you know. So you know under output approach what and what you add. Under expenditure approach, what and what you add. Under income approach, you know what and what you add. Then based on the information, you have to see what information have they given me. So have they given me complete information to find through the output approach? No. Have they given me information to find through the income approach? Income approach, they have given this. But then where are the other components? You can't find. But for the expenditure approach, all the components are there. So if you know the theory, guys, I don't think that's hard how to find the approach. Okay, so take some time, go through. Okay, that's 2012. Okay, how did you all do so far? 4 out of 4. There were 4 MCQ. Yeah. Okay, good, nice. At least even 3, I think it should be okay. Okay, right. We'll move to the next.